Good morning, everyone. My name is Dan Hussey from Zaner Ag Hedge, bringing you our Strategy of the Day morning update and look at the markets after a USDA export number this morning, which you would have thought, given the report and a 1.2 million metric ton export number for soybeans, we'd be seeing a much better show from the markets here today. But obviously, that's not the case. We're seeing a bit of a sell-off here and a technical breakdown on the charts that we were worried about over the last couple weeks and that we've been covering in the room. And a big reason, we have to hop on here and do a video and update you guys is because we're seeing in real time a breakdown of those technicals. You can see here on the chart here, I've got up the July corn. We're starting to break below technical support here. This trend line support drawn from the May lows, just lows, all the way up. We started to break here at 317 today. We are making now a series of lower lows and lower highs on the daily candle. This is why I have those up on the chart. Remember, on my charts, we've got the light blue and magenta lines representing the high and low of a day as we look at intraday candles. So we've got the high and low for the day on the chart for every candle there. So you almost have a daily chart on this as well. And then you've got the monthly high and low, this dark blue and dark red dotted lines, the highs and lows for any particular month, and in this case for May. So we're marching our way in the range of May, a little bit lower here for July corn, heading down now and below that trendline support. Doesn't look good, but we've had generally a very choppy and very sideways market and market price action over the last couple weeks. So it's pretty good to it's pretty good to see that we are going to be. Give me one moment here. All right. Anyway. Getting our self-posted live here on Facebook. Give me 1 second. Okay. So again, exports for corn here came out. Let me pull up my numbers. Don't want to give anybody bad numbers. Can't be memorizing everything these days. So 884,000 metric tons for corn. That was right in the middle of the range of analyst expectations, between 500 and a million metric tons. And generally, it's been on the lower end of what we've seen for corn exports over the last several months. And when I say that, I mean because we've seen such record exports of 1.2 and 1.3 million metric tons over the course of the last few weeks. That's something, nothing, 800,000 metric tons is nothing to sneeze at, but obviously not groundbreaking or record shattering. So nevertheless, we're seeing the July contract in the futures for the month of May being very range bound and now breaking below technical trendline support. I don't see any reason why we'd hold 50% in this range, right, which we're starting to come below now. We were looking at yesterday as maybe the reason we were finding some support yesterday, and it probably is the reason we got a technical reaction off of 317. But now that and that trendline support, but now that we're breaking below, this is either a singular flush out from a technical perspective, and we need to then retrace and close today above 320 quarter, which absolutely could happen. But it more than likely is the start of a breakdown, and that breakdown could, and some price projections could take us down towards that $3 level for July corn. So if we continue to see that flush out and a little bit of downside price action, that's where we might be heading, even on the back of decent export numbers. All right, so soybeans here today also breaking trendline support, coming in now at 837 and a quarter. Low of the day is just below us there, tagged moments ago at about 836. We are not at the lows of May yet at 831.5, but we are starting to break below that trend line that was holding, just like on the corn chart, was holding us up. Very range-bound sideways price action. I mean, all things considered, we're actually inside the price action the last week. The rally we saw of a series of higher highs and higher lows, which was true until today, has broken, but we ultimately have not broken the lows that began that trend higher, and we haven't broken the prior lows that have held as support. And the only time we did break out of this range was for a moment there as we tagged the 860 area back in mid-May, or a week ago, really. I guess it's almost 2 weeks ago now, but we really have been between an 860 and 830 range, and we've just been finding away in the middle of that range. However, the breakdown of the technicals we're seeing on the chart today, rolling over somewhat, seeing corn breakdown, does lead me to believe that if we are going to continue the downtrend, a move towards $8 now might be in question for the July contract of soybeans. And that's something to be very concerned and considerate of on a day like today, because we had what could have been the makings of a reversal, what was a very, very meager start to an uptrend. It was defined by series higher highs and higher lows. There were some technicals like trend lines and other things holding. Now that those have failed, things have rolled over. We flip the hat. We go from being maybe bullish on this price to now being maybe technically bearish because we just broke some levels. Now, that doesn't mean that we aren't fundamentally, changing anything here based off of what we're seeing on the chart. We know that exports are starting to pick up, but this market is likely saying something to the tune of, they're not good enough. And I'm excited to say that later today, after the close, at about 1:30 Central, join me again. We're going to have Ted Seifried of Zaner Ag Hedge. He's the chief what is his official title? We'll get it out there for you. But he's the chief market strategist, and he's certainly the head of the Ag Hedge division. And he'll be giving us a rundown of his thoughts of the markets. And we'll be talking about corn, wheat, and beans in particular, and we'll see what the market has to say on those. So with that being said, everybody, I'll be back with you as price action develops later today, monitoring these breakdowns. We'll have a discussion later today with Ted Seifried. With all that being said, I can be reached today if you want to chat about the markets. 312-277-0110. That's 312-277-0110. At Daniel Hussey Jr. on Twitter. At Dan SOTD here on Facebook. You already know me there. And dhussey@zaner.com. Again, join me a little bit later today after the bell, where we'll be talking with Zaner Ag Hedge's Ted Seifried about where we see this market going. Have a great day, everybody, and we'll be back with you later today and as price action develops.